There's two ways your VA home loan is originated, meaning the process a lender goes through to qualify you to buy a home and use that beautiful, beautiful VA home loan. So every lender runs a VA loan through an automated underwriting system, also known as AUS. When that system can't determine the risk and eligibility criteria, the loan basically gets downgraded to a manual underwrite. So that's why you have an automated approval, which is like approved eligible, which I'm going to explain later. And then sometimes you're going to be like, well, this doesn't qualify for that. Now we need to do an actual manual underwrite. And that's when a person looks at it, not a computer, and says that, yes, you do actually meet the requirements for using the VA home loan. And it's important because sometimes people will be like, well, why did I get downgraded? And there's definitely some significant impact on that, which I'm going to explain. But you can definitely get downgraded from an automated approval halfway through a transaction or all the way up towards the end of buying a home, because it's really going to depend on your financial picture. And there's a lot of factors that go into it. Sometimes the system just can't recognize that things have been updated, let's say on your credit report. Like for example, like if you have a recent bankruptcy in the last 2 years and you're just 2 years out of the bankruptcy, the system it won't recognize it. And then that's basically going to cause it to be referred or downgraded to a manual underwrite. And why it's so significant is that sometimes, well, not every lender does this, but I see it because I look at a lot of approvals all the time, thanks to folks like yourself that reach out for me to review their loan documents and see if we can actually help them more. And if you guys have questions throughout the whole, any of the process that you're in, there's a in the description, there's a link to contact us. Happy to review loan estimates. Happy to walk you through the process. It's what we love doing and helping our veterans. Now, so typically on a manual underwrite, you're going to have a higher interest rate, and typically you're going to pay higher fees. Not every place is like that. We're not like that because we want to be able to at least be able to make that dream possible of being a homeowner. Now, your credit score is definitely going to have an impact on what your rate's going to be and your fees. But some people have really good credit scores, but they just might have a life event that happened that makes them be downgraded to a manual underwrite. And I keep saying downgraded. It's really not that bad. It's just how that approval process works. So I'll stop saying that. And sometimes the process takes longer because there's more documentation that you need to gather, which I'm going to explain in a little bit. And then also you do have a higher risk, this is reality, of getting denied for a loan a couple days before closing. Now, the reason I do this video is because every other day, at least, I get a phone call from a veteran watching one of our videos, and they're like, I was with this bank, which normally it's the top lender in the country in VA home loans. They're like, hey, I just got denied for my loan, even though I was pre-approved. And we'll look at it and go, well, what happened? This just recently happened on Friday. And sometimes it's heartbreaking because people search for a long time to find a home, and they're excited to purchase a property. And it's kind of shitty when someone calls you and just says, just kidding, you don't qualify because we didn't do our due diligence. Not me, but like what the lender is doing. And a lot of that could be avoided if you educate yourself and you know that process and how you can utilize the resources that exist. So let me walk you through what that process looks like so you get an insight into what it should look like. So then when you're talking with a lender, it's like a reverse interrogation, right? You have the information that you know how things are supposed to happen. You have the loan officer on the other side. You're basically doing like a spot check on them to be like, yes, they're doing this. So then I can confirm that they actually do know what they're doing, because a lot of people will tell you they do a lot of VA loans, but they don't do them. They just want your business. I come across this all the time. All right. All loans are put into a loan origination software system, okay? You're probably like, why do I need to know all this? Because you do. You want to know how this works. So for example, they use Encompass or Calyx, which is kind of like the most popular information. You fill out an application, they put that information into that system, right? The loan officer puts all that information into the system, and the information, this is key, is only as good as the information that is provided. Now, this is why the pre-approval process is crazy important, right? You must submit all your financial documents if you're serious about buying. If you have a pre-approval right now and you didn't submit your documents, find a new lender, right? Our number one complaint from customers is that we ask for too much documentation. You want to be thorough as possible because I get those phone calls of people being denied. I want you to be successful. You should want you to be successful. So with that, if you guys have questions or want to schedule a call with us, link down below. We're happy to talk with you and help you through that journey. So after the loan officer puts that information into the system, they got to run your credit. Yes, a soft credit pool, I want you to understand, won't let you run an automated underwriting system. You just can't do it. So you're just kind of guessing. And we've had times where we're like, oh man, this is good to go. They got good debt to income, good residual. But for some reason, the system didn't like it and they didn't get an approval. They had to be downgraded to a manual, and then they changed the parameters of the loan for them that they couldn't do what they wanted to do. All right, this is why the documents need to be reviewed. The lender needs to know how to do a VA loan analysis and correctly put the information in. VA looks at residual income. If you don't submit your like actual pay stubs, guess what? They don't have the correct residual income, and then you could be screwed. If the lender's not asking you what square footage of a property you're looking at, they're also wrong because the VA accounts for 14 cents per square foot. And they qualify that against you for qualification purposes. So that's another big reason that you want to do that. And then once they have everything and everything's correctly put in, a lender's going to do, they're going to run a software system in one of these systems. A lot of softwares within softwares. They run Desktop Origin Underwriter or Loan Prospector. So it's Fannie and Freddie Mac based. I'm sure you've heard of them. And then within that, Ginnie Mae, which is the FHA and VA, because they're government, right? Government products are underneath that. And basically the system checks those eligibility requirements, risk category, right? Do you have collections, lates, how much you utilize debt, how do you utilize credit? They look at trending data. All that's factored in. It's marked against other people out there in the world that have applied for mortgages, gotten mortgages. They've gone into default. They look at all those patterns to make those decisions that you can see, right? Most lenders in the country run Fannie Mae, not Freddie Mac. And why that's important, you're thinking like, well, David, again, why do I need to know this stuff? Because you can be approved for one and not the other. So a lot of times when we run, like let's say we're really tight on numbers and we run it through Fannie Mae, it may come back that, hey, this is a manual underwrite. Well, if we flip it on the other side through Freddie Mac, we can get actually an automated approval, so we don't have to go through additional loopholes that you would have to go through, right? So there's basically a couple different type of decisions that come out from this. The easiest one is, hey, you're approved and eligible, you meet the risk standards and eligibility requirements, you're good to go. You have approved and eligible, you meet the risk category, but not necessarily the eligibility requirements. The other two are manual underwrites. That's refer eligible and refer ineligible. That's when a human has to determine that you do meet the guidelines. Now, VA is extremely loose, so loose that I even look at it and I'm pretty flexible. And I'm like, man, like they really don't have many things in place to be able to deny a loan, which is good and bad. But veterans, remember, still go into foreclosure because lenders may miss some things on that. That's why manual underwrites has an additional layer of complexity, and every lender is going to underwrite these loans different. So from the example from Friday, the veteran, man, it just kills me like how this whole thing went down for him, but they got denied by two other lenders. We were able to do it because we did some additional digging into the guidelines. So then we knew like, hey, this is what happened. We provided the documentation. Okay, it's doable. But a lot of people kind of get stuck in that. They're like, I don't understand. When they come to us, they're like, I don't understand why I can't get a VA home loan. Well, because depending on your profile, your credit profile, your income profile, residual DTI requirements, this is going to have a major impact. And then the manual underwrite is very lender specific. There's no general guidelines because, again, the VA is pretty loose. So what typically gets overlaid is going to be debt to income ratio. There's going to be a cap. With that cap, they might also have residual income overlay. So let's say in an area, the income requirements, you have to have $500 left over after all your bills. But they may say, well, we want a 200% residual. So you have to have $1,000 left over. So that overlays to that 50% debt to income ratio. Sometimes you're going to have compensating factors. I'll give you a couple examples. Like you have minimal consumer debt. You have little or no increase from current rent. So let's say you're paying $3,000 a month and your new mortgage payment's $2,800. Well, that's very positive. And because you're going to have to provide a 12-month rental history from a landlord or, landlord property management company saying you've made all your payments on time. And if you already have it reporting to your credit, that makes it a little bit easier. But you're going to have to provide this. Some of them want 24 months, right? Not just 12 months. And if you don't have that, you're kind of SOL. But others may not. They may look at it and go like, well, he paid cash, or, they'll provide, I was looking for my phone, but like they'll provide like, hey, I Venmo my landlord every month, or I Zelle them, whatever, to show that, right? Because sometimes crazy things happen. Like we had a landlord that passed away. They couldn't do it. Well, we had all the proof. So it depends on the lender and how flexible they are. If you have a down payment, that can change your approval in general from from a manual to an automated. That definitely sometimes helps, or reducing the overall debt to income ratio, even though the VA primarily looks at residual income. Okay. So those are things that are going to be that. Having any recent lates also can disqualify you, but that's something that you don't want to disqualify yourself. Talk with a lender to be able to do that. Now, let's talk about some good news that comes with that. Now, not every lender does these, but I highly recommend it for manual underwrites. Is that you get a pre-underwritten loan, meaning that a lender is actually going to underwrite the loan before you start looking at properties. One, it makes your offer a lot more competitive. Two, it takes all that drama away. Am I going to get approved or not? Because a lot of times they just need extra time. And I'm telling you, it's well worth doing these because it just saves so much money. And the reason I say that is that, like, when you go under contract, you order an appraisal. That's, like $500 to $1,000. And the VA charges that. It's not the lender, so it's based on the region. We could talk about that for hours in itself. Then you're going to have to pay a home inspection. VA doesn't require one, but I highly encourage you to get one, even if it's a new construction, especially if it's a gut rehab and really anything. Even if you plan on renovating the house like I did, I still got one just because I want to know, like, hey, is this gonna work for what we're trying to accomplish with that? And then if you're buying a condo, you also have to pay condo to get the condo docs. Also depends on where you're at in the state. So you might rack up $1,500 only to find out that you couldn't do what you want to do. Is devastating for you financially, for your family, because you're thinking, hey, we're going to be moving. You're excited. You're telling your friends. It's worth it to take a step back, take a little extra time, and focus on what's important to you, and working with someone that you can trust. Again, we're happy to help with that. Hope you guys like what we talked about. If you have questions, comments, drop in this comment section. Please hit the like and subscribe button, and I'll catch you guys soon.